Hello traders and Market Club members everywhere. Adam Hewison here, coming to you from the digital studios of Market Club. It's Monday, it's the 17th of August, starting another trading week, and I wanted to share with you today our internet portfolio, Market Club's internet portfolio, to show you exactly how it works and how you can benefit from this very simple approach that's been proven year after year. So let's get started with that. We follow 5 stocks. The first stock we'll be looking at is Facebook, which is one of the stocks we follow, and we are on the sidelines in this stock, and it's pretty simple to see why we're on the sidelines, because we simply go to our trade triangles, which we use for this portfolio. You can see that the monthly, the longer term trend is still positive right here, but the weekly trend is down, indicating you should be out of the market on the sidelines. It's negative 70, somewhat of a trading range, so you want to be out. Don't park your money in something that's just not going to go anywhere. So that's the first stock we'll be looking at. The next stock we're going to be looking at is this one, Yelp. And Yelp it is, because look at this situation here. We're short from this level here, 46.08. The original signal came at 64.70. It just shows you how long this market has been in a bear trend, but we use the weekly for timing. Okay, so when the weekly red kicks in, we want to short the market. And in this case, we sold it here. And yes, it did rally up, but it did not get us out of the market. And that's the key thing. So from this level here, 46.08, currently trading at 26.03. I think you'll agree it's a $20 profit. And that's a huge percentage gain on this particular stock. Don't try to guess the bottom. Don't try to guess the top. You just go with the triangles. That's all we're doing here. Next stop. What we're looking at, of course, is Netflix, the juggernaut in the rental of DVDs and videos. So here we are. Signal came in right here at 63.09. You can see it's reflected here. Both of our trade triangles are green, so we're trading with the trend, getting in at 63.09. And you can see we're currently trading at 124.49. A huge profit. Almost doubled our money on this one. And that's just since April of this year. Again, these are stocks that you can trade with our internet portfolio. We give you the signals every day. So it's not, we don't look back and retrofit it and figure out, oh, this is really a great trade. No, we show you every day where the signals are. So let's move on to our next stock. Next stock is Yahoo. Now you notice right away that the red trade triangles, monthly and weekly, are red, pointing down, indicating you should be short this market. And we're short from this level right here, 36.62. It's currently trading at 36.06. The move may have just started. We don't know. It could go down to 30. We don't know, and we don't want to know, and we don't want to guess what we think the low is going to be. We're going to let the trade triangles tell us what the low is going to be and when the market turns. And that's the key thing. We want to get the 70% fat part of the move. The tops and the bottoms will leave to some other professional traders, but for now, the trend is down, both with the monthly and the weekly, and you should be short this market, which we are from this level right here, 36.62. Small profit there. Next stock. Just as Netflix is the juggernaut of DVD rentals, Amazon's the juggernaut of e-commerce around the world. I think it's fair to say. So here's our last signal right here. 381.77. We have not had another signal. This is again back on April 9th, 381.77. The market's currently trading at $529. A huge profit. I think you'll agree. We're not thinking this is the top. It could go to 700. Who knows what it can go to? We are just going to follow our trade triangles. When this weekly trade triangle turns red, we'll get out of the market and take our profits. It's just that simple. Now so that's it. They're the 5 stocks we track. And if we go to the portfolio page, you'll see there's the simple trade triangles. You want to ignore this first column of trade triangles, okay? This one right here. If we're trading stocks, you want to ignore this area here, okay? That's not going to be affecting us at all. That's just the minor glitches. These 2 columns, the monthly and the weekly, are the important ones. The monthly for trend in stocks and the weekly for timing. It just works. And you can see when you have a situation where, let me clear this up, where you have obviously a red and a green in conflict, you're on the sidelines. It couldn't be easier. 2 reds, you're short. 2 greens, you're long. 2 reds, you're short. It's just that simple. So that's how it works. So let's take a look at our next stock that we like, GameStop. GME is the symbol. and we have all green trade triangles. So let's take a look at that stock right now. Now here's the stock. The signal came in at right here at 47.62. The market has dropped somewhat. It's 46.71. So you can actually get in pretty much, actually almost $1 less than we got in. So it just shows you this is a potential trade. And the risk factor would be, of course, if we go under this level, under I would say the 45, 44 level, that would be you would have to be stopped out at that point in time. But this seems to be a pretty good trade to us. All of our trade triangles are green, indicating a strong upward trend even after today's pullback. Okay, here's a dismal dog. Crude oil going down, has been going down for quite some time. We've been short literally from a huge amount, 42.69, but 52, 58. All these areas have just been proven to be very, very profitable for us. But the thing I want to bring to your attention, which I brought to your attention last week, was the situation where you have had the market going down like this, but you really have flattened out in the RSI. This is not, it's indicating somewhere along the line there's going to be a rally. I don't know when that's going to happen, but it's going to be a rally. But for now, stay with the trend. Gold was a bright spot last week. That closed up 1.9% for the week, which is pretty good considering it's been under a lot of pressure. It's over the 50 line. We still have our trade triangles are still sort of mixed trading range, but it looks as though it's trying to make a turn to the upside. So we'll watch that this week. The euro dollar, we've been pretty positive on this in terms of we've had the weekly, which is what we use for timing. Now this is different from stocks. The weekly is used for timing in currencies. So the daily is red, so it's a sort of negative trend right now, a trading range trend, 55, so that's where you should be. But we're over the 50 line. It does look like it's trying to flatten out to go higher. This is the Dow. You can see the Dow is sort of a minus 90, all red triangles, not a good sign, but it's trying to make a base. This is a pretty important day. This sort of hanging, this sort of doji line is very important. You had another doji line plus a confirming reversal trend here. So let's see how that plays out. S&P 500, much the same. 3 trade triangles dodging along the 50 line, which is resistance. If we close over that line, it may indicate some further strength in that market. Last index is the Nasdaq, and that's a little bit different. You see the monthly is already green. We're waiting for the weekly to turn green, and that will really get this market going on the upside again, if that's going to be the case. Hey, I'm Adam Hewison. We've covered a lot of information. Check out our internet portfolio. I think you'll really find it useful and helpful, easy to follow for sure, and you can make some good profits with that. Thanks for watching the video, and I'll be back in the next day or so.